Welcome to Financial Investing Radio, where you'll learn the secrets for consistent, high-probability returns in the financial markets for additional income to change your life. Grant applies consistent, high-probability trading systems for the financial markets. He's only recently started sharing these tried and true market secrets. As a gift to listeners, Grant is offering his roadmap to high-probability financial control. Go to financialinvestingradio.com and download yours today. Now, here's your host and trading veteran, Grant Larson.
Hi, everybody, and welcome. This is Grant Larson. Welcome to another episode of Financial Investing Radio. I am very excited because today I have with me one of those traders that has definitely influenced me. His name is Jeff Crystall. Years ago, Jeff and I had done quite a few different strategies around system development and algorithmic trading and so forth. Anyway, I'm very happy that Jeff took some time out of his busy schedule to be here today. So first of all, welcome, Jeff. And I tell you what, why don't we just get started with what got you into trading and how long you've been doing it?
Well, I'm originally from Idaho, and I was young, really young, like maybe 23 or 4, and I wasn't getting along with my mom so well, like most 23-year-olds, and I moved to Salt Lake. When I moved to Salt Lake, there's a trick that kids can know to get in-state tuitions. There's hotels hotel chains all over, like Marriott. Well, if you're a bellhop for Marriott in Idaho and you transfer jobs, the state of Utah immediately gives you in-state tuition because it was a job transfer. So I bellhopped for this place for a month. I knew the manager. He transferred me down to Salt Lake, but they didn't have any bellhopping jobs, so I had to be a bouncer. And all the professional wrestlers stayed there, and all of the hockey players stayed there, and I had to be the bouncer on the weekends, and I couldn't handle it. And so I had to stay there for 3 months. I switched jobs, and I moved to a hotel right next door. And that, I got robbed at gunpoint. Somebody put a pistol in the back of my head, pulled the hammer back. It was a nickel-plated .38 with a snub-nosed barrel. The guy smelled like patchouli oil. Yeah, he actually killed somebody, Grant. A couple weeks later, he was on America's Most Wanted. And so after I got robbed, I just found this job in the paper. It was with a company called BMI, Bonneville Marketing Information. And they were on the cutting edge of developing satellite technology. They hadn't quite developed that yet. The VBI, vertical blanking insertion lines, and transferring data through FM and modems. So they try to transfer it through cable TV, satellite, and they would transfer data through FM signals. And back then they were 2,400 baud modems. And all you had to do to get the job is you had to know a little bit about construction and a little bit about PCs. Well, construction part wasn't hard. I grew up in Idaho, and that's what my dad would have me do all summer, is work it with he was a banker, and he'd make me go out and work in construction or work for a farmer. I'd rather work for the construction guy than the farmer because paid a little better. And then I started working at BMI, and BMI got bought out by eSignal, and eSignal, I worked for BMI and eSignal for about 10 years, but they had a nickname for me, Grant. It was Mr. Other reasons to keep that kid around, because they would never fire me because first off, and this will kind of make you chuckle, on the staff, there's 127 people on the staff at BMI. Nobody drank except for 3 of us. And so they'd send me out on sales calls because I'd go have a beer with the trader. But I'd usually I'd tip the bartender, order water, I'd get water, and then I'd write notes about how the guy was trading, trying to sell him a stock system. I'm doing that for 10 years. I got to fly all over the country, meet people like John Bollinger, go to his classes for free. I've given several lectures with Bollinger. That I get to go meet like Martin Pring and Steve Nissen and all the authors inside there of every book, because they would send you out, and then some pretty famous traders. One of the guys who taught me how to trade the very most was a guy named Tom Huff from Las Vegas. He was a guy that worked on a railroad, but he's a professional gambler. Another guy named Tom Joseph, spent the most time with me, and he had two employees. One was named Mike Quanbeck, and Quanbeck had worked for Stottlemyre, and Stottlemyre's a pretty famous trader. And then you had Andy Bushaka, and he was a GAN expert. And I would go around and I'd meet them in different parts of the country over a 10-year period. And what got me into those guys and helping them is at BMI back then it was very, very expensive to get stock market data. That stock market data would cost $2,500 setup fee, $2,500 a year, and then $2,500 for software. So I started asking all their clients. I said, well, how much or what software do you use? They said, well, Advanced GAN, and that was done by this GAN Elliott trader. And that's how I got involved with Tom. eSignal eventually bought them out. But I traveled around with Tom's company all the time. Three weekends a month, I would be in a different city. They'd give a presentation, and then I'd give a presentation. And I would get to go to dinner with lots of the customers and ask them how they were trading. And I would trick them. I'd get them drinking, and I wouldn't be drinking, and then I would write notes down. I'd write notes about how they were trading. So I built up quite an extensive playbook over that 10-year period. And that's how I learned how to trade. And what got me into trading was just getting robbed at gunpoint. And I quit that job, and I just lucked out. I fell into it. If I wouldn't have got robbed at gunpoint, I wouldn't have been trading.
Well, you don't hear too many stories where goods come out like that, huh? That's so you weren't shot, and B, yeah, you got into trading. That's amazing. So yeah. with the lessons that you learned over the years, what instruments have you traded? I know that you and I've done options work before as well as futures. What are you trading nowadays?
I trade a little bit of everything. So as I've gotten older, my tolerance for risk has declined. And I never used to like to trade bonds. There's some corporate fixed interest junk bonds things I'll trade that can come into like different ways to arbitrage. I trade stocks, options, foreign currencies. I work a lot on mining of, I kind of feel like technical analysis is totally changing, and so I take some additional classes also to help me with that. To help me trade all those, I go and take classes on the sideline, but I trade everything essentially.
So how has technical analysis changed? Are things changing with the way that you trade now? I mean, has the market changed, or what's different?
Oh, totally. So I've been trading since clear back to probably 92 or 94. And when I first started trading, there was really, really large spreads inside the market. It would be $1 to trade some things. And then all of a sudden, these internet companies started taking off, and like eSignal. And once they started taking off, they would well, I'll give you an interesting side note real quick. This is a little side note. One of the reasons there's a lot of investment companies in Salt Lake, this company called BMI, what they did is they developed this thing. I don't know if I've ever told you this, Grant, but they developed this thing called FDSF code, Financial Serial Port Data Stream Format. They would compress IBM, the open, high, low, close, so that they could send it over the modems. Well, those guys went and ran an ad inside Barron's and inside the LA Times and inside the New York Times and inside the Wall Street Journal and said, come to Salt Lake and we'll teach you how to build, this is right when personal computers were coming out, how to build a chart in there. So the guys from TradeStation came to that company, and I got to meet all those. Bill and Ralph Cruz, they owned TradeStation. Then the guy, Steve Akalis, who started Metastock, Howard Arrington, who started eSignal, and Michael Smith, who started Big Easy Investor. They all came to this conference here in Salt Lake, and they were taught how to take computer data and put it on the screen. Now, I wasn't that sophisticated with computers, but they put that on the screen, and the spread slowly started to narrow. As they came out with NASDAQ, NASDAQ was the first big change where they had a kind of a centralized exchange, but it did away with the floor traders. And there's something of note that you should think about. All the exchanges are worldwide have been sold off into private investors now. They're public companies. My belief system is that was a way to liquidate the insiders, to get them out of the New York Stock Exchange. And then what happened is, you had that big run in the late 90s where you got just everything went up when the internet was coming out, and then it pulled back through 2000. And it dropped into from 99 to 2001. It was really a bearish market. After that, the market kind of stagnated and calmed down a little bit. But around 2007, something really interesting started happening. And you have a computer background, so you can agree or not agree with this. But around 2007, I think they came out for home users. They came out with the i7s and terabyte hard drives that you could afford. So people and the delivery systems of all the data on the internet had started to harden up from about 95 through 2001, 6-7 years of hardening up. You could get all this data on your computer. And what I see happening with technical analysis is it's becoming a data mining craft where you're looking through lots of data. So a good example of that would be Jim Simmons, not to be confused with Gene Simmons. He's the best hedge fund manager right now, and he runs something called Renaissance Capital. He's having a squabble with some of his employees, but this guy's a mathematician. He only hired non-traders, and he does a lot of data mining, but he won't tell you what he does. But over the years, I've met so many clients, like probably the two best clients, about 2006 for me, I met these people. One was he wanted to learn how to trade stocks, and what he did for a living, he worked in Houston, Texas on the in the company that turned the valve to send the oil to LA. And he told me something that stuck with me for a long time. He said, hey, did you know when the ambient temperature gets to about 109 in LA or it starts popping up, I have to send gas over there? And at first I'm like, no big deal, but then it dawned on me what he just said, and then he started grinning. He'd been trading gas futures on the side because he knew when the gas went up. And all it was temperature. And a lot of the guys around there knew that. And that's a relationship. It has really not so much to do with technical analysis, but a relationship within data. So big data is starting to take over the market in lots and lots of ways. I can tell you one that's a little bit more current. I'll tell you about one lady I knew. So a lady I knew, and I assumed she had really poor computer skills, and I didn't know that she was knew as much as she did. For 42 years, she worked at a shipping company, and she could tell me every sector that would ship at what time of the year. Well, that's invaluable information. A lot of that's public now. And so I see the technical analysis completely changing into data mining or looking for relationships within databases. Not only that, we could have another call where we could sit down and I could tell you, I was written up in Stocks and Commodities magazine for some techniques I developed that self-modulate indicators, and it has to do with data mining. So I think that the skill a trader needs is to understand right now relationships, especially with globalization coming on. And I'll give you guys a great example. I'll send these databases to you, Grant. You can look at them. If the British pound, the British market goes up, and the German market goes up, and the French market goes up, and they all three close up, there is about a 69% chance that the U.S. S&P will close up for the day. And if all three markets turn down, there's about a 70% chance that the S&P will close down. Now, that is taking three different markets and looking at them and saying, oh, these three different markets are telling me which way something's going to go. And there's some really neat things you can do with that now. The indexes have come a long ways, and relationships between different countries have come a long ways, and there's some very interesting models you can look at that predict direction that the market's going to move. Yeah, so there's some interesting things you can do in there. So that's the first wave of what is currently being traded and is currently changing. But what's coming up on the future in like 5 to 10 years is really interesting. But go ahead.
Yeah, no. So just to recap, so the ubiquity of technology into the hands of multiple traders is a big change. The second is because of that and because of the cost and the economics around it, data mining is now a critical part, and so therefore you use that to look at correlation, so correlated or inversely correlated markets to help you get a sense of the probabilities of a direction. Is that what you're saying?
That's correct. Oh, totally. That's 100% correct. Or even you can get intrinsic or fundamental information out of that, like the guy with the oil. Because you can say, if you were to take the temperature, which seems totally unrelated to the market, the temperature of LA or the whole West Coast, and correlate that to the movement of natural gas, that's not something I would have innately done. You know what I mean? So there's some information in there that you can get. But go ahead.
It's amazing how many APIs are available today now as well. You look at sites like Quantopian and Quant that you can use REST APIs to integrate with those and extract a lot of that data now as well. So that's becoming free or at very low cost to people now.
Oh, totally. There's some sites I participate in, like QuantStack. Sometimes I'll get in there. Some of these kids that are just coming out of college, what they really need is creativity to look at data. They can't look at it in a static way. And that's true of their jobs or anything. A lot of the quants, they're still pressing through the old models. So there's still money to be made on this, but it'll dry up as it becomes more and more efficient. It'll force the market to become more efficient. And that'll dry up. But coming up, the thing that I think is going to completely and utterly change trading totally is happening right now. You can take something like these blockchains. Don't confuse blockchains with cryptocurrencies. A blockchain is simply a ledger, and those ledgers are taking anonymity out of the market, and this is where I'll reference back, hey, these guys sold off their positions in the stock markets. You don't even need a stock market anymore. All you need to do is mine a ledger. There's a guy that's selling something. That guy's selling something. You could buy it out, and you could completely cut out the middleman going into blockchains. And that also does away with dark pools. It does away with blockchain technology. Will also do away with anonymity. And anonymity, when you go to trade right now, and you're Soros, and you want to hide your trade through a corporation, he opens with J.P. Morgan Chase. J.P. Morgan Chase is who represents the trade in the open market. So all they know is it's a J.P. Morgan Chase client. Well, pretty soon, if you're creatively thinking forward, imagine having support and resistance on a chart, Grant, and every curve on support and resistance is labeled with a firm and how many shares that firm has. Oh my gosh, you'll know so much more about the market, so hanky-panky in the market won't happen. You can't open an account at one place, sell it, and open an account at another place and buy it and manipulate. You can't do that. It won't work. So blockchains are going to change it, and 3 exchanges I know of have picked up blockchains already.
Yeah, that's powerful. Yeah, because certainly today, the big institutions, do a lot of manipulation and are able to do things like that. So that's to have that identity management as part of the trading transactions, to be out in the open like that will definitely change. That's incredible. So today, what strategies, given the current where we are now, things have certainly changed from when you started trading. What kind of trading strategies do you use?
Right now, I think that most people should not be selling time decay. And I'm a strong directional trader, and I've had dinner with some of the guys over at Tasty Trades, and I've been in arguments with them about this because they don't feel like that you should have a directional bias. Because options are so cheap, some of my favorite strategies right now, this is another way I mine data. I'll give you 5 points. I'll say, find me a stock that rises 6 out of 10 years over this quarter. Find it in the bottom of that 6 out of 10 year run. Make sure that its sector does the same thing. Make sure it has great fundamentals according to its sector schema, and make sure that it's moving overnight. If that happens, I sell a put and I buy calls. And the calls are so cheap that when it goes up just a little bit, I do that. I do anything with ratios right now because the VIX is so low, there's no reason not to be ratioing the tar out of things. And so I ratio these up as soon as I can close the risk or obligation leg, the obligation of my options. I'll take those off the board, and I'll just leave it on for the bigger run, because I feel like even though we've gone sideways, whenever I've seen something in the market, when it's gone sideways for a long period of time, the next thing that happens is there's going to be a breakout. So I try to position myself for that run. Yeah, I try to position myself for that run. Does that make sense?
Yeah, it does. Yeah, that's impressive. So with your vast knowledge and vast years of experiences with this, what would be some tips that you would share for someone that's just new, just coming into this? What would be something that they would study or avoid, or what's your guidance there?
The first thing you should study and you should spend all your time on is money management. Most people spend 90% of their time identifying a trade. That should be done by a computer. If you can't identify the trade in a few minutes, then go buy a product that'll do it for you, because they're not that expensive. Just go get a product that'll scan for you and find you a trade. But then spend the time studying, contemplating the but if it goes and does this, but if it goes right here, what am I going to do and how will it affect my portfolio? I can think of a really bad thing that happened 2 years ago that caught so many traders. It made me sad. There was a lot of traders 2 years in a row. There was a problem in China, and all the theta traders lost because of a big move that I knew. And then the very next month we had some issues here in the United States. So two months in a row on Expiration Friday, the market moved 3 sigmas. You know what that does to a theta trader? It thumps on them hard. Yeah. And so this is a couple of years ago, and I think that you need to be ready and position yourself in such a way, and don't be so greedy that you have to take every penny. Position yourself in such a way that if there is a big move, you have your biggest wins. And that's a good way to do what's called trade management. And you need to have trade and risk management. That should be studied more, a lot more. There's not a lot of information out there because that's the most proprietary thing to a trader. Yeah. But that's where you can pull out different ways to look at trade management. But that's what I would study if I was a brand new person. I wouldn't study how to buy a trade. I would study how to manage a trade. And I would gravitate towards any lectures, anything I could get my hands on. In the end, Grant, after I have a pretty extensive playbook in the way I put it together, that section in my playbook is where it's the least developed with notes from other people. It's more developed with notes from me. There's a lot of notes in there from me. It's a huge section of my playbook. But no one would tell me anything. I would go take a class. Remember, I got to take classes for 10 years all over the country for free. And when I take those classes, the instructor would never speak about trade management. Never, ever. Yeah, it was kind of shocking.
Yeah, that's powerful. Yeah, in fact, when you practice, you got to make sure that that's where you spend your time, which is, all right, something went wrong. How do I get out of it? How do I minimize my risk? How do I minimize my loss? Yeah, those kinds of techniques are hardly ever taught anywhere. So true. All right. Yeah. Jeff, I really appreciate you taking the time here with us today.
Let's do it again, and we'll add some extras. Not to interrupt you, but let's do it again, and we'll talk about some other stuff inside there you might find interesting.
Let's do it. Great. And to my audience, thanks for listening in today. And until next time, trade safe.
Thank you for joining Grant on Financial Investing Radio. Remember to subscribe and leave feedback. Don't forget to download your free roadmap to high probability financial control before you make an investment decision. Visit financialinvestingradio.com now.